Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Apple. We have the Q4 2022 results and tech, well, the market as a whole, but tech has just been getting crushed lately. We saw Facebook today down over 20%, Snap's being hammered, Amazon, you name it. So taking a look at Apple, actually as of recording this, it's actually up a little bit after hours. The report, it wasn't as bad as expected. In fact, it was kind of good. So today we're going to go through that. We're going to go through their financials, take a quick look at the financial statements, and then I'm going to give you my opinion on the stock. So the big line here, top line item, revenue was over $90 billion, 90.15, and that actually really beat expectations. I think that's maybe what's saving the stock right now. 88.64 was the estimate, so big beat there. Again, EPS was a beat as well. Keep in mind though that they're buying back a lot of their stock. $1.29 versus $1.26 expected, and cash is $169 billion. I'm still including this here for you guys. They want to be net cash neutral. I caught a little bit of the conference call. I wasn't able to listen to the whole thing today. And again, they reiterated that they're looking for any kind of acquisition that is going to help the company. So that might be something, maybe even like Facebook. I don't know. Some people are talking about that today. I really doubt that. But with some deals showing up, you never know what kind of company Apple might be interested in. So this isn't so relevant, but still, something to keep in mind, still over $169 billion in cash, right? And we didn't see any deceleration in terms of revenue. We've actually seen it go up. So now the individual segments here. iPhone revenue, now this is the one that kind of hurt a little bit. It's $42.63 billion they made last 3 months versus $42.67. So a slight miss, but these aren't really large misses. It kind of reminds me of last quarter a little bit. There was quite a few misses, but these are very small, especially for this macroeconomic environment that we're in right now. So that's something to be said. iPad revenue was 7.17, a little bit more of a not a beat, a miss. 7.81 billion was expected, so a little bit more there. Mac, of course, the Mac, they've been doing a lot of work on the Mac, so this doesn't surprise me, but doing very well. $11.51 billion, and the expectation was only about 9.25 billion. So big beat there. Services, surprisingly enough, was actually a miss as well, but not by much. $19.19 billion in revenue they made versus expectations of 19.97. So yeah, not that much. And again, I think this is 2 quarters. You can look at my last view. I think last quarter was the same thing. Wearables, home and accessories is beating a big beat again here. $9.65 billion in revenue versus $8.8 billion a year ago. So all in all, not too bad. So let's take a look at the financials here and take a quicker dive into this, or a deeper dive, if you will. So taking a look at the income statement here, total net sales were 90.146. As I mentioned, look at that year-over-year growth from 83.360. So this is the same quarter 1 year ago in 2021. Remember when things were going nuts, stock was going nuts. So that was a huge beat. So anybody who thinks there's not growth in the company, what's going on right now? There still is. Operating expenses, I always bring out the research and development. Again, $6.7 billion in the last 3 months. They're not shying away. A year ago, I was still talking about this a year ago, I think, saying how it was increasing. It was $5.7 billion. So that's increasing. I like to see that. Operating income was up there. You can see $24.89 billion versus $23.78 billion a year ago. So the net income was up slightly, not actually too much, $20.72 billion versus $20.55 billion a year ago. And then the earnings per share diluted $1.29 versus $1.24 a year ago. So good to see, but I mean, keep in mind that if you look at the shares that are used for computing that earnings per share, they're actually dropping, of course, because they're buying back so many shares. So that always boosts EPS. It's good, but just something to keep in mind. Net sales by the reportable segment, again, they're actually up in every area except for Japan. Americas 39 versus 36 a year ago. Europe 22.7 versus 20.7. And again, that China, I talked about this last quarter, is doing much better. 15.4 versus 14.5 a year ago. Japan was the only one with a slight decline there. And the rest of Asia Pacific was up as well. Likewise, except for the iPad, every net sales by the reportable category was up. iPhone is still growing year over year. Of course, we saw a little bit of deceleration a while ago, but $42.6 billion versus $38.8 billion same quarter last year. Mac again has been skyrocketing 11.5 versus 9.17 a year ago. And the iPad has been kind of light, but of course, keep in mind they're talking about their supply chain issues. I think last quarter they were saying that about the Mac actually, but they were also saying about the iPad. Something to keep in mind, but always seems to be kind of a bit of an excuse. Wearables, home and accessories up, and services as well. Taking a look at the balance sheet here, cash and cash equivalents, marketable securities, and the non-current marketable securities add up to the cash amount that we have. Not too much to see here. In terms of the cash flow statement, purchases of marketable securities, I found it kind of interesting that they're not purchasing as much as they did a year ago. Also keep in mind, this is for 12 months ended. This statement of cash flows, the last one I believe was for 9 months last quarter. I believe they're doing it this way because it's kind of like the whole year, right? Q1 will be Q1 2023. That'll be the next earnings for Apple. But keep in mind, that's why these numbers are a bit different. I was looking at net income at first and I was like, $100 billion? They didn't have $100 billion net income. Well, that's because it's the last 12 months. So payments for dividends and dividend equivalent, 14.8 billion, of course, versus 14.46. So they've been upping that slightly, of course. So you can see that there. And then the repurchases of common stocks, over $89 billion in the last 12 months versus 85.9 a year ago. So the cash and cash equivalents at the end of the period was 24.977 billion. So unfortunately, guys, I wasn't able to catch the whole conference call. I only caught the tail end, and I'm not going to be able to review it before the end of the day here. If I do, when I do listen to it, if I do hear something that's interesting, I'll either update it on my YouTube or on my Twitter. So if you're really interested in that, go to there. But a couple things that I caught and a couple things that I knew. One thing to keep in mind with this is that the iPhone revenue, like the iPhone itself, 14 was not shipped until the last week of the quarter. So I bought, that was something that I bought. Keep in mind that's not going to be reflected in there. How much demand there is for that, well, that's up to you to decide. Again, no guidance, but we haven't had any guidance since I think 2021, right? So nothing new there. And there's a lot of uncertainty right now, especially with the US being in the recession right now. Potentially global recession going on, right? So I'm not going to talk about that a lot in this video. Haven't been making a lot of videos lately because I've been quite busy. But things are looking pretty bleak with interest rates rising, which was kind of inevitable with the amount of money that was printed and stuff, right? But yeah, so there's not much more to be said about that from this video. The other thing, of course, you probably heard was Apple Music and TV Plus. They're upping the prices. This is like a lot of streaming services. So I actually took an investment in Netflix a little while ago here. It was a good investment, about 50% now already. And they mentioned how seems like they're not going to be raising their prices anytime soon. They're adding the ad tier and stuff like that, whereas all the competitors are saying are going to be raising their prices, and of course that's what Apple's doing. I think most of this is going to be going to the bottom line, so this is something to watch as well. But how popular, I don't have a lot of information on Apple TV Plus, how well it's doing. They don't have a huge catalog compared to the other ones, but that's just something to keep in mind as well. So all in all, I was actually expecting worse. I know I'm always saying good, but it was a good quarter. Huge revenue beat. EPS is up. A lot of things are up year over year. We just had some slight misses on some certain categories. So I'm pretty happy with that. The next quarter we have coming up is a holiday quarter. So that one, of course, will hopefully be a stronger quarter, but it all depends on these macro conditions, what's going to happen going forward. So anyway, guys, if you have any comments, leave them down below. Don't forget to like the video and subscribe. It really helps me out. And that will be it for today. See you guys in the next one.